what if I told you that you're currently holding a shitload of S&P 500 and other ETFs, and you might be falling for a huge trap and missing a massive opportunity to make a fuckload of money? Let me show you. Guys, I will never ever deny this. Well, I shouldn't say that, but it's going to take a long time for me to deny that the S&P 500 is phenomenal. You can buy VOO, SPY, really buy the entire American economy and just let it ride. If you're a believer in the US economy, that's where you go and you match the market, beating 98, 99% of those Harvard MBAs out there trying to kill it. But guess what? There's a trap with that. You're missing out on some of the best opportunities out there for buying, but that's why we have our channel. On this channel, we're trying to teach people how to spot opportunities, how to think different. When the market's going down, how you can look at that as opportunity. Because even though everybody out there says that, they say it because the market's been up. But for the market to go down, news will follow the stock price. All the negative will be out there. I've said this in so many videos. All the friends of mine who back in the mid-2000s said, oh yeah, I'll continue buying stocks no matter what happens. Great financial crisis occurs, they all sold. Well, Paul, what you didn't get is blah, 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 blah. It'll always be what you didn't understand is blah, 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 blah. Guys, the world shut down in early 2020. We had a full-on shutdown. And before the shutdown actually occurred, that's when the S&P bottomed. But were you one of the ones who was able to go buy during those times? Now, guys, if you bought in 2000, which was the peak of the S&P and the NASDAQ back in 2000, back during that whole dot-com bubble, you still did pretty well holding till today. In fact, if you dollar cost average on the absolute peak of the NASDAQ to today, you would have seen the NASDAQ fall 83%. You would have seen the S&P fall 60%. But guess what? You still would have made 14.5% a year on the NASDAQ from then till now, and 11 or 12% of the S&P from then until now. And even if they both fall in half in the next couple of years, it's still a huge return of close to double digits for the S&P and over double digits on the NASDAQ. Those are incredible, but you've also missed out on certain things. Guys, this is Meta. Meta is the one company of the Mag 7 that's up this year. Now, here's what's amazing. Back in 2022, we had a little bit of a bear market. Meta came in right around $400 a share and bottomed at 88. Guys, I'd like you to do me a favor at some point when you're bored. Go watch the videos of what we talked about with Meta and go look at what people were saying back in late 2022 about Meta. And guys, I was dollar cost averaging sub 250 on Meta and it fell to 88. And sure enough, everybody said, Paul, you were wrong. And maybe I was. But I looked at it saying, damn, this company keeps growing revenue, keeps growing profit, and this company's down over 75% from its previous high. I'm looking at that going, wow, what's happening here? Is this a company that's going to zero? I'm like, if it's going to zero, why is revenue and profit up? Why is there potential for, I remember looking at going, in the US, they generate $40 to $45 per user per year in revenue. But abroad, they're at like, some of them are $4 or $5. I'm like, there's so much more potential. And they were spending $10 billion negative, losing $10 billion a year on their metaverse. And I was looking at going, everybody says it's going to fail. So if it fails, they all of a sudden save $10 billion a year. It made a lot of sense to me. And the stock shot up from there. Now, that's the big trap you're falling for. What you're doing is you're missing out on these mispricings of stocks and opportunities. I truly believe you have to have the S&P 500 and even QQQ at some point in your portfolio. But what we're trying to teach here is your ability to spot specific companies that you can jump on immediately. Look at a company like what I believe to be Alibaba. I think Alibaba we're going to look back on and say, holy cow, this was a huge opportunity out there. Southwest Airlines, I also look at an opportunity. Microsoft back in 2011 and 12, that was my first indication that value investing truly does work, that people's perceptions are not reality. Microsoft back then had the same outlook from people as Meta did in the end of 2022. Microsoft's dead. It's a tech company that lost its way, et cetera, et cetera. I'm like, but if they're dead, why are their revenue and profit consistently going up every single year? That's what I want you to remember. That's what you need to be able to do to get that extra return. You buy the S&P. You dollar cost average in the S&P and then QQQ, and you'll probably from there outperform the market if you start on the QQQ at the right price. But even more important, if you see these opportunities in individual stocks, that's how you can jump on them. That's why we have this channel. That's why we have our community. We have these tools that when you're ready, because opportunities don't last a very long time, you've got to be ready to jump on them. We are not a channel that's going to tell you what to go buy. That would be absolutely terrible of us to do that. Those other channels out there do that. And guess what? We believe that once the full bear market happens, a lot of those channels will pivot to some other way of getting users to watch their videos. We're here to teach principle-driven investing. And those foundations of that are, one, we're investors, not speculators. We believe that when you buy a company, you're sitting there buying a future stream of cash flow. Because number two, every investment is the present value of all the cash flows you get in the future. So if you're gonna get $1 a year for the rest of your life and you pay $1 billion for it today, that's a bad investment. But that same $1 a year, if you pay $5 for, it's probably gonna be a very good investment. The same stream of cash flows, but what you pay for it today is what matters. And that's our fourth one. A great story can become a bad investment if you pay the wrong price. Now, the third foundation we have, so I skipped number 3, is if we don't understand it, we don't buy it. But what was there not to understand about Meta? What is there not to understand about the S&P 500? What is there not to understand about QQQ? These are very easy business to understand. If you don't understand them, that's why you have to go to our community. Have the conversation in the community. Hey, what are you guys seeing out there? Because guess what? All the best investors ever, they did it with things they understood. Their stocks didn't overlap. Their investments didn't overlap all the time. But if they understood it, they bought it. And the fifth and final pillar of our principle-driven investing. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. Meta, the vote was this company sucks. The vote is this company is awesome. Go look at what they said about Zuckerberg here, what they say about Zuckerberg now. The biggest mistake I made was I sold at 200 thinking this company had run up too fast and was going to pull back. One of the biggest mistakes I've made. So if you want to be able to jump on those opportunities, even if you believe in just full on ETF investing, like my cousin in Canada, he says, Paul, I have all ETFs, but I like learning about these companies. So if the time comes right, I can go buy it when I want to. That's what I want you to be able to do, because those opportunities could jump in and really make a difference in your savings and investing. So guys, this is our retirement calculator. This is a great way of seeing not only do you have enough money to retire, can you live your rest of your life with this? And I want to show you the importance of just a percentage point difference in your returns over a long period of time. Here are my assumptions. Age 30 currently, retiring at 65, you currently have 100,000 in savings and you're saving 10,000 a year. You're getting 9% return on your money through retirement. And during retirement, you get 6% return. You expect to live to age 90, inflation 3.5%, you make 75 a year and you want to live off that same income in retirement. Do you have enough money? Yes. Based on those current numbers, you have enough money. And at age 65, you retire with about $1.75 million in money and you will never run out of money. Now, let's say you can make some opportunistic buys that increase your returns by just 1% per year. Let's take 10 and 7 during retirement. I took the investing annualized returns to 9%, from 9% to 10%, and during retirement from 6% to 7%. Remember, we were at 1.75 in retirement money there. Now the difference is this, guys. At retirement, you have $2.3 million. It's $550,000 more just by adding 1%. And at death, before you had like 800,000, now you have $2.3 million. You have the exact same amount of money. That's what's incredible. That's how much 1% per year changes your story. And you don't need to do it with a lot of investments. If you do it with a few opportunities every single year, because they're out there, you can absolutely crush it. So if you're serious about making smart and principle-driven investments, you gotta check out our community. I'm not asking you to sit there and make a lifelong commitment, but this is the community of thousands of investors with all the tools they need to become better. But more importantly, when times get tough and we have bear markets, you need to be around people who are like-minded, who are going to sit there and show the optimism, because the world will never end. And if it does end, you might as well be investing anyhow. So go to everythingmoney.com, try out the community. I'll see you in there. And if you want to watch our full course on becoming a better investor, you can't afford to miss the next video, because understanding how to spot those mispricings and hidden opportunities could be the difference between average returns and life-changing gains. Thank you for your time.